Hey guys, welcome back to the channel today. Today I'm going to be talking about some tips, I guess I want to say. Stock trading tips, okay? We all come to the markets every day and we're all trying to figure out exactly what we're doing and so on, but I want to be kind of this as a refresher, reminder type lesson. But this is a compiled list of different tips of different stock traders, including myself and some of the others in our room, that have kind of talked about the key moments, key points, key areas that really pertain to us as traders. And we look so far over this, especially some of you newer guys. You know, you may struggle with some of these areas, but it's kind of interesting when you kind of put it together in a list and so on. But I want to go ahead and talk about those, emphasize a little bit on them. We had a very strong week this last week right here with Faye. Was insane on Friday to see a move from what 14 something dollars all the way up here to almost 20 bucks. And this was alerted in our chat room too as well, under a very early stages, and some of those options ran well into the thousands of percent here, guys. I mean, it was nutty. But to see it alerted right here from 15 cents and to see those options run almost to $3, I mean, was nuts. I mean, thousands of percents. I showed my trade on this one too. I did a couple trades, but this was on Faye. It was a $1,200 investment that turned into 1,185% returns. Turned that 1,200 bucks into $14,000. Okay, it's nuts. But you see my process here. I got in at 1048 with 100 contracts and just started peeling them away. 25, 25, 25, 15, and then the final 10 near 20 something minutes to close there. But it was a nutty run to see that kind of insane, insane move to make out of the gate on that one. There was no sign of weakness on this one. I don't know. We'll see what happens this next week on it. But look at this thing. It just climbed, and the only significant pullback was right here, kind of right after I sold at 332 there. But really nice to see that position. Really nice to see that breakaway and then pull back. So we'll see how that one continues. But today I want to kind of talk about these key points, what makes us as traders, guys. We're very emotional human beings most of the time, and we're attached to money. We're attached to the risk tolerance that goes with this. And everybody's got their own, their own way of life when it comes to trading and trying to overcoming hurdles or boundaries and things of that nature. But the first topic I've got here is never underestimate the power of momentum moves up or down. Okay, once the freight train is in motion, it will keep going much further than most have anticipated. I had no visionary, aspect of seeing Faye run up to this magnitude. I mean, it was nuts to see this kind of move, and it's been a while to see, options play out to that strong of a move. But never underestimate it. When the trend is your friend, guys, it is there. It's rock solid. It is climbing. The move is going higher and higher, and that's why I fully recommend, guys, make sure you get in your entry in there and don't be scared out on the first pullback. So many people like, oh man, red candle, let me jump out, only to see it run another 500% or something beyond where they decided to take it. But as long as you understand your platform, you understand where your trends are starting to build here, you get a feel for lows, those dips have to happen, guys. To see something go straight up with very minute dips made it a very unusual chart. But you got to have those dips, guys, because you have to interest new buyers, okay? Don't expect the same buyers to keep buying and buying and buying and buying and no dip is going to happen there. You've got to interest new buyers, and new buyers like to buy, pullbacks on strong charts. Every time it pull back, they're going to look for those pullbacks for a strong chart. And every time it did it, I mean, it just got ate up alive. But to see that move, it's very important, guys. This is something you all have to, eventually build up or figure out. But never underestimate that power of momentum. I mean, it is insane. Another thing is price is the only thing that matters. Adapt to it. Don't fight it. Okay, so the price action on these charts, guys, that is the only thing that matters. You have to understand that price action. You got to understand your charts. I teach this in all my classes for the students. Understand that roadmap. Understand where resistance points are going to start playing a key role into where you're playing at. I mean, you got to know just as much on Apple or any other chart. Every chart on my watch list is going to have some form of, technical analysis attached to it here. I'm going to know exactly where these levels could bounce, where these levels could break through. And candles, guys. Too many people have all kinds of indicators and studies and such things. And if you guys can understand that, then kudos to you guys. I've started out with indicators, but I found them to be more meaningless than meaningful when it came to understanding that price action. So don't rely so heavily on indicators when you cannot see your candles. You got to be able to see these candles. You got to understand that the next candle could break the previous candle and so on. But very strong moves on these. I mean, last week we had a very good month or very good week, and you see these battery charging companies. I expect them to be completely growing as far as well. But right there, break of previous high. That's an entry right there, where your candle is continually crushing, those previous highs, and you can go back to a 2-minute chart for some of you guys that like to trade this noise. You're looking for those highs to break, and there's your entry, there's your resistance, there's your breakdown, and so on. I got to know these channels, and it makes it so much easier when you got this stuff pre-charted ahead of time, and you guys can kind of play with it. But it's kind of funny how to a T that plug bounced off of a Fibonacci line right here, 0286 or 786, excuse me, at 3302. And what did we hit? We literally hit that and then pulled back. So it's very important to understand the breakouts and the pullbacks and so on. That's how I'm trading. I'm not just buying something with a prayer and a wish and hope that it turns out. Okay, so understand that price action, adapt to it, never fight the situations. Okay, no stock is going to give us what we hope it will give us. It's going to give us what it's going to give us, and as long as we understand that, we're going to be very successful with it. Don't underestimate the power of desperate money managers in the fourth quarter. Okay, they need to beat their benchmarks or risk losing their jobs or clients. Okay, you get these price analysts all of a sudden coming out with their outlandish price targets and this and that, and they're like, oh, we think this stock is worth this and this and this and this, and they're trying to get these crazy price targets that make no sense whatsoever. I follow them here on Market Beat, but it's kind of interesting. It's kind of funny. I watch it every day, but I'll go through the list right there, and it's like, okay, well, they gave Apple a price target raise of 150. Why are they giving a price target raise? The stock is just going to trade as it will. I mean, I could care less, about the raise unless it really helps it. Okay, so you want to see if it actually affects the market, affects it, and if it affects price action, then by all means, you got to pay attention to it. Is the only reason I pay attention to it. But I'm going to be watching that price action to really get a feel for exactly how is it going to affect the stock. Okay, look at this. They gave a price target raise on Friday right there. I'll pull it back up right here. So on Apple, price target raise on Friday, and this is for 12/18, which was Friday. The price target raise of 150, and what did we do on Friday? We fell. Okay, that in a sense doesn't make any sense. They're like, well, why did it drop? They gave a price target raise. Well, most of the time, it's a bunch of idiots on a desk. They're getting paid a salary. They're supposed to make the stock look like, supposed to make it. Investors come to the market. For all I know, their brokerage that they're an analyst for could be trying to sell shares, and they need to entice retailers like you and me to go out there and buy the shares that they're trying to sell. Okay, it's a manipulated game, guys. So you have to be very mindful of those price action raises and not to not fall into the trap, so to speak. So price action is your friend, guys, not these desperate money managers that need to beat their benchmarks or risk losing their jobs or clients. Okay, mental stop is another way of saying I'm not sure where to place my stop. Okay, I use a mental stop, but be sure to stick by your rules always. You're only the person to blame when you start breaking them. Okay, so if you're in a trade and you have a mental stop loss of such and such and such, and you're like, okay, I'm entering here, I'm entering for a break of there, and I'm entering for a risk loss of here, then by all means stick with it, guys. It is very, very, very important to analyze your trade, understand that your stop loss has to be there in place. Capital preservation is the key component to fight another day. Okay, so if you jump into play, and by all means, guys, don't put your whole account in one play, but if you jump into a play and it starts going against your reasoning of playing, then why are you still holding it? Very important to have that stop loss in place. And you guys can sit a solid one there by limit sell or something on stop of such and such, and it's going to automatically pull you out. But don't readjust, okay? So many new traders come to the market and they're like, okay, my stop loss is here. Okay, maybe I can add a little more pain here and let it drop some more, and then a little more pain, and I'll pull it back some more, and then some more, and then some more. Before long, you've literally deleted an entire week, entire days, entire months, hell, even a year's worth of gains in one trade. Okay, so it's very frustrating for some people. You do not want to play that way, guys. Capital preservation is everything in this market, okay? Especially with choppy waters right now. We're trading very choppy markets coming up here to the end of 2020. So very important to stay disciplined and cut those losses, guys. Okay. If you don't see any reason why you would enter the play where it's at right now and you're just losing on it, then why are you still holding it? Okay. Ask yourself your questions. Ask yourself those questions and make sure you stick to those rules. Don't ever change a stop loss. If your stop loss is such and such, stick with it. Adding to a losing position is one of the best ways to end a trading career. This is another tip, guys. How many times have we been there? Okay, you're in that losing position, you broke all your trading rules of stop losses here, and you start losing. You're like, some people ask me like, oh, I've got an option that expires on Friday. I know it's Wednesday, but do you think it's going to bounce back tomorrow? And do you think I need to add some more, here to try to make up the loss? No, I do not. Adding to a losing position is one of the best ways to end your trading career. I mean, write this on a sticky note, put it on your screen, on your desk or whatever. But guys, adding to a losing position is the best way to end the trading career. Okay, don't add to losing positions. It's like putting good money after bad. Okay, you made a bad choice and didn't stick to your rules on the first trade and you're losing. Like, oh, let me average down, maybe that'll fix everything. Okay, does not always fix everything. Obviously, if you got long-term visions on a long-term holdings, averaging down can make sense, but day trading, guys, this is death. Okay, it'll literally ruin your career. The biggest winning trades normally have big volume driving them higher. Okay, so situations kind of like what we got here with Faye. Big move. I'm gonna go back to it here real quickly. Lots and lots of volume. I go throw in a volume indicator down here. I'm gonna actually change that to volume lower. And boom, look at that volume that we had for that one day. Okay, compared to this is a daily candle. Okay, so this is a daily chart. Every candle represents one day, and you look at all the competitive days in advance of that. It's like nothing happened compared to what that is. You cannot underestimate that volume. There is no telling how much volume comes into the day. The price action just breaks. You want to see that noise on the 2-minute chart, and you're like, okay, I see the pullbacks, but they're very minute. It's following a trend. I can feel consistent with what's going on right here. I can stay in the trade. I start seeing signs of weakness, but my stop loss when it comes to situations like this is going to be rising, okay? Or call them a stop gain, not a stop loss, okay? I've entered the play. I've come up here and I'm like, okay, well, if we break down below that support, I'll get out. Okay, we held above it. Okay, if we get down below this support, I'll get out. Oh, we held above that one too. Okay, well, I'll keep going. And if we break below this support, I'll get out. We held above it as well and continue as we continue. Okay, guys. Obviously, it got to an abstract price that I just, without a doubt, was already peeled out most of my position because I'm scaling out along the way. I got to lock in that gain because anything can happen. News can come out and we can see the biggest drop you ever saw in your life and lose all that momentum you had throughout the day. So it's very important to lock fractions of your position along the way. Okay, very important. As you guys see it right here on this one right here, where I'm locking in positions as the day rolled on and these contracts continued rising. I got these things at 12 cents, okay, and they went to the dollars. Had I held them longer, these things went almost to $3. I mean, it was nuts. So insane to see that kind of move. And of course, it does happen thanks to options. I love options. Just that very key factor of it, guys. It's very important to watch that. Okay. So the biggest winning trades normally have big volume driving them higher. Okay. Another thing is too many eyes on a key breakout point will likely cause that pattern to fail, aka fuckery. Revisit the new setup after the fuckery has shaken out of the majority. Okay. So you'll see a breakout position sometimes on a stock. It could be a pattern breakout. It could be, a specific target breakout. It could be anything. But make sure, guys, that breakout is, within reason, and it caused not so much of a fake out. I'd have to go back and find a chart with a fake breakout. But very important, guys, to let that breakout really confirm itself. Don't really jump into it because too many eyes on that breakout. It could be a daily breakout. It could be a 5-minute, candle breakout. It could be an hourly chart breakout or so on. And it can cause that self to really mess up because there's too many eyes on that particular breakout, especially on low float stocks. Now, sentiment is always more negative on bottom retest than it is the first low. Watch out above if the retest is successful. Okay. So many people rely on sentiment to make their decisions on trade. Okay. It's always more negative on bottom retest than it is the first low. Watch out before the retest is successful. Another point is be aware of stocks that take too long to go. Early indication of demand is drying up. Okay. So this scenario right here, when candles start getting shorter and shorter and shorter and shorter near the top edges of stuff, it's taking too long to go. That demand for that stock is starting to dry up. And you can guys see this on stocks that have literally peaked out at the tops for a period of time. I'm not sure if Faye did that on Friday, but I'll take a look real quick. Not yeah. I mean, the candle started getting long wicks. That's a clear sign right there. When you start having long wicks at the top, that's a clear sign that the demand is starting to dry because they're not being able to close these candles much higher. Okay, so when you start seeing those long wicks, it can be a clear sign of weakness is starting to set in. This is exactly where I started jumping out of the trades, my last and final position. But the rest of the things here, you don't see those long wicks. They stayed pretty consistent. Right here, we actually had one. But then multiple long wicks can be a very telltale sign. Even the little teeny tiny short candles. Did Penn have it last week? Yeah, I mean, we got some short candles right here. Then all of a sudden our drop. A few short ones in there, but nothing major. Not a good illustration to be able to show you guys specifically, but I have to go back and look at a few charts. So in that sense right there, be aware of stocks that take too long to go. The early indication of demand is drying up. So if they're taking their time to finally break, it sometimes can be, a very slow go if it does go. The best trading setups work immediately after they trigger. They barely give you a chance to jump on board. So sometimes you'll get those big breakouts all of a sudden in a play. And Tesla actually is one that did it on Friday. And I guys can show you this. There was a few hesitant traders in our chat room last week, and they're like, "Oh, I don't know, man. I don't know if this is a play yet." And I was watching this pretty closely. Let's see when this was. This was Thursday into close. We obviously had this dump and then pullback, but it stayed consistent on this resistance line. And it was during this little phase right here. I was like, okay, I think we're gonna pop pretty hard. And then in that sense, what convinced me was you got higher lows immediately, okay? And you got yourself a trend right there. You got yourself resistance that obviously is not being able to be impacted per se. And you're finding that breakout point right there, okay? And that breakout point is just going. The immediate it broke that breakout point, guys, causing this as a severe breakout point. Those options just flew, okay? That move on Tesla is pretty significant. It was literally from 648 all the way up here to 658, a whole $10 move right there and some change. So massive move, obviously can jump those options up in a very big way. And, understand your chart patterns, understand your technical analysis, and you're going to be a whole lot better on when you know those key breakout areas, guys. A lot of money to be made on those particular situations. Another key factor is the best traders are incredibly nimble. They can be bearish, but still capable to take longs without hesitation, okay? I call myself a 50-50 trader. I'll trade short, but I'll trade long just as much as I trade short. To be honest, I'd rather trade long, but whatever the market demands, I'm going to be there right along with it, guys, okay? So be nimble. We've traded in a very short and bearish and bullish market this year due to the whole COVID process here. But guys, as long as you stay nimble, you can take both directions of either trade and profit on both sides of it. So you got to stay nimble. Don't come to the market with a vision of, oh, I'm only a bull. I don't short stuff. And you get wrecked on a bearish day, okay? Or you get wrecked on a bullish day if you come to the market as a full bear, okay? I've got a few bears in the room that have gotten wrecked this year. Due to the fact that they think, oh, the stock is so overpriced. We're in a pandemic. Everything is so way overbought, and they're over there checking their RSI indicators, like, oh man, this thing is so overbought. I'm gonna start shorting it, only to get wrecked. Okay, price action is your friend. Not saying that indicators are trash, but guys, don't rely 100% on them. Indicators are literally suggestions of possibilities that could happen. Okay, perma bears and perma bulls. Okay, these are new traders who decide they're bears or bulls, eventually get washed out of the market. You have to respect a strong bull market and you have to respect a very mean bear market. We've had both scenarios this year, okay? And that literally probably wrecked a lot of new traders this year when they come to the market and they're full bull or full bear or whatever the situation may be, only to get completely washed out, okay? Like I said, guys, capital preservation is everything. Stop your losses when they need to be stopped. Don't jump the gun and be completely biased on your opinion. Watch that price action. That price action can change your decision on a flip. More trades not equal more trades does not equal more profits. Less is always more. So many people come to the market and say, man, I gotta have more money. I gotta trade. And I see a guy over here doing 50 trades a day that's making less money than the guy doing 2 trades a day or 3 trades a day. Okay. He's over here buying and selling, flipping this and flipping that. And it's like, man, so much commissions coming out of your situation there. You're tossing money in and out in a very emotional manner. Less is always more. Okay, I give the example where I had a guy come into my class who was trading with $40,000 and he was making less than the guy trading with $5,000. He was putting large chunks of money in and getting scared out immediately, and it was chaos. Okay, all depends on how well managed, well fine tuned of a trader you guys are. But always less is more. Don't try to push trades or get into a situation where you think you just got to trade more and that's how you're going to make more money. No, that's not the case. Less is always more. More consistent patterns, more consistent trades, more realistic looking setups versus taking every trade under the sun. The best traders I know keep their routine very simple. Okay, this is another scenario. The best traders out there keep their routine very simple. Price charts and volume is all you need. Most indicators are noise the majority of the time. Never confuse your macro views with what is actually happening in the stock market, okay? We all have an opinion, okay? That's just the way God made us. We're opinionated people. Never put your macro views into what is actually happening in the stock market. Get messages like, "Hey, Mike, don't you think we got to start shorting it?" Like, no. We're in a bull market. Everything is flying off the handle. Sure, I think we're overpriced. Sure, I think it's crazy that we're up this high. Sure, I'd love to see a drop, but you know what? I don't think it's time to short yet. I'm gonna keep my opinion there, and I'm gonna play the price action. Price action is telling me it's not time to short yet. Okay, so never confuse your macro views of what is actually happening in the stock market. Economy could be in a recession, but if the market is rallying, you need to listen to the market. It always pays better, guys. Okay, so you got to listen to the market, even if the economy is in a recession. Big, powerful statement right there. Fighting the trend doesn't pay well. In general, trading with the trend pays off much better, right? So know the trend, guys. Don't fight against the trend. Don't try to be that dip buyer who's trying to buy a stock and you think it should reverse here, only to find out it doesn't. So be very disciplined. Be patient with your setups. Know what you guys are looking at. Get aggressive when you make 2 to 3 good trades back to back. Okay, so there's those situations where you got really good day going on and you see setups just flying off the handle. Okay, it's just one of those days. I generally will get aggressive when I have 2 to 3 good trades just starting to hit up and pile up pretty good right there. Okay, I've understand it. I'm getting fluid with the market. Everything's very working out very great. I'm going to stay consistent with it, and I'll jump in those trades and play aggressively. Now, get very defensive, though. This is another factor when you've made 2 or 3 bad trades, okay? How many guys are you making bad trades? Are you writing these down in a journal? Are you understanding why they're bad trades? Oftentimes, traders will do the opposite, okay? They self-destruct behavior. When they do bad trades, they get aggressive, okay? When they do good trades, they get defensive, okay? It's a bad scenario. You got to reverse that right there. And I know that could probably pertain to some of you guys here that are listening on this video, but it's very important, guys, to understand that, okay? Be very defensive on your losers and be aggressive on your winners, okay? They're amazing. Trading on margin is the surest way to emotional decision making and eventually will wash you out of business. Okay, guys, if you are not experienced with trading on a margin account and you're actually borrowing money from your broker to play with more than what you've got in the margin account, that is the surest way to eventually wash you out of business, okay? Like I said, capital preservation, this is not gambling. This is understanding consistent market methods and making more money. Never underestimate the confidence building power of a tiny gain that is booked. Green on the screen helps build confidence for future trades. Okay, every time we make a good trade, we know that builds our confidence, right? It just kind of boosts ourselves up and like, oh man, I'm working on something here. Something's working good for me. So obviously understand that. Okay, the green on the screen always helps build our confidence. Big winning streak starts with tiny wins. It's a snowball effect, okay? So don't go trying to jump into stuff with a big win in mind, okay? Start small. Those tiny wins do add up, and then all of a sudden the big win does come right along the path. Most losing streaks start because of a basic rule was broken. Emotions start taking over. How many people been there? You get in a losing streak because you broke your rules. Maybe you readjusted that stop loss we talked about earlier, and your emotions start taking over. It's okay to be wrong, okay, but it's never okay to stay wrong. Okay, so it's okay to be wrong on a trade, but as long as you understand you're wrong on it and you jump out of it, you guys are on your road to success right there. Okay, that is a big step. But if you continually stay wrong and keep playing as if you're staying wrong and you're holding this losing bag and it's just dropping, then that right there is a success to never trading again. Good fundamental analysis and proper technical trading is a killer combination. I love the two together. I started out as a fundamental analysis, and to that degree, I've gotten better combining the two together. Okay, so always add the two together and then watch price action. Too many bullish setups is not always a good thing. So you wake up in the morning, you see everything's just bullish everywhere. A plethora of bullish setups normally precedes to a big down day, aka fuckery. Okay, this can sometimes be a bull trap, as you would say. You see the markets are green, everything is pushing up, it's pumping up. You see all these killer setups, and market opens at 9:30. You're all ready to roll on your calls, only to see the stock market start crashing, everything start pulling back, everything start dumping. This is a perfect setup to really mess somebody's day up. Okay, so too many bullish setups is not always a good thing. I like to have both sides going, to be honest. Trading stocks is a lot like a beauty contest. Which looks best always wins. The best technical patterns, in my opinion, are the bull flags or double top breaks. I love that strength momentum. It comes in many varieties, so learn to spot them. Okay, I love the double top breaks, or even just consistent top breaks. Right here on Tesla is a good example. There's a triple top break right there, and boom, there's your entry and easy exit up here to that resistance line. I'm always looking for those breaks. Right here's another example. Top, boom. We climbed up after that. In this scenario right here, you could actually call this a top. And of course, we hit the top but did not break. Okay, so in that scenario, it's failed. But the pattern is still in play due to the fact that we got lower highs. So learn to spot those trends, learn to spot those trades, and you guys can definitely be more and more successful with it. This thing right here broke up, but the target was not much higher there. So different scenarios often require different outlooks. All right, so candlestick patterns don't mean anything without follow through. Okay, some people are so set on their candlestick patterns. A hammer or a doji means nothing unless it gets a follow through the next day. I don't use candlestick patterns. I just use the candles in general. But to me, watching them as a pattern method, I don't really use it that much. It's very hard to short a market when the financial XLV stocks are strong. Okay. So, right now, this next week here, we're going to be looking at XLV stocks because that's the financial stocks, bank sectors, and all that. They're going to look strong this next week because banks are going to start buying up, share buybacks and so on coming up. So, very strong to look at these this next market. Never short the markets when the XLF is always strong. You guys can keep that as a note. Trading with conviction is great, but trading with arrogance is a sure way to the poorhouse. That's a good tip right there. You have to understand you cannot impose your will on the market. The market is bigger and smarter than you, and you need to adapt to it, not the other way around. Sentiment pools are worthless for the most part. Focus on price action. Okay. I see these little Twitter bots all over Twitter, and they're like, "Oh, look at the sentiment on this stock." Everybody's tweeting about this is the top tweeted stock. This stock must be the greatest thing out there. Uh, more people are tweeting about this action, more people are tweeting about that action. Sentiment polls, in my opinion, are worthless. Okay, sure, I'll analyze them sometimes and get a possible idea, but to be honest, if you trade just off of sentiment polls, just because you see the most tweeted stock out there, doesn't mean it's a good trade, guys. Okay, do your own analysis, be understanding on that. Just because a sentiment poll says this or that doesn't mean it's a great trade. Focus only on that price action. Now, more market bottoms take place in October than any other month. A simple observation that I've made over the years. So it's interesting to me too. October is always the month of the reversals, so to speak. So it's kind of an interesting bottom area for some of the stocks that I've noticed. This year, obviously, being quite a bit different than past years. Never sell your entire winning position. This kind of goes back to my Fay trade there. If you see no weakness yet, scale out with fractions so you can still ride the wave without emotional conflict on missing extra gains on your winners. Perfect example here with Fay. If you don't see signs of weakness, scale out those small fractions, okay, guys? Whether it's 5 contracts or 10 contracts, peel off one, peel off two as the strength continues to keep grinding up. Never compare a past trade to a current trade. Each one is individually different. Now, how many guys have you been in losing situations and you see another setup and you're like, I don't think I want to take it because this last trade really lost my ass, or this stock, last time I played this stock really ruined me, or this stock did this, or this stock did that. Guys, never compare a past trade to a current trade setup, okay? Each one is always different, okay? I've had people in our room too who are frustrated about even attempting to play a certain stock because it left a scar on their minds or something. Sure, if it's going to be, emotionally overpowering you to do so, then by all means stay away from the trade, but never compare the last two, okay, guys? Never compare losing trades to the same stock, any different setup. It's a key area, guys. Hesitation to good trades in trading is a powerful drug, filled with emotions, fear, greed, no conviction, and being afraid to play as thoughts rush through your mind of past trades. How many have been there? You're hesitant to take trades because it's an emotional fear that you got to still overcome. Always be aware when short interest on the New York Stock Exchange starts to hit record highs. Normally means we're getting close to a major bottom. Okay. So if you see stocks being overly shorted very hard and it seems to be they're at record highs, it generally means that a bottom is starting to set in. In December, okay, the month of December we're in right now, small caps and micro stocks or even junk stocks do come alive. Many will double or even triple in a few days. Okay. It's not necessarily every month, but December seems to be that month for doing so. Keep your approach as simple and as basic as possible when it comes to trading, guys. Can you explain your approach to trading to a 10-year-old? The market is master at forecasting events well ahead of time. By the time the actual news hits, the market has already discounted it. Okay, this can go to earnings report plays. Everybody's like, man, they had good earnings, but why is it crashing? Well, the market has already forecasted the event, and by the time that actual news has already hit, it's discounted it. Okay, so always keep that in mind. If you're trying to play for news and you hold over into earnings, or you're holding over into a news catalyst, and when it comes out, most of the time the markets sell because it's discounted it already. Okay, never short a market in momentum mode. Okay, when markets are in momentum mode, never try shorting it. Never short a market that is either quiet or choppy. Okay, you're like, well, what's quiet? Well, quiet is when the market is really slow, it's low volume. It's actually kind of what we're dealing with right now with Christmas coming up, New Year's around the corner. A lot of people are not trading as much. Okay, markets are a little bit lower volatility, so never try to short it, even though it's quiet or especially choppy, where you get a lot of up and down movements. Trading in a choppy market is one of the most difficult and frustrating things to do. Shorting over the long run pays very poorly. Odds are heavily stacked against bears over the long run. So, guys, if you're just nothing but a perma bear or whatever, and you're like, I just short everything, then you're up for some dissatisfaction in life all the time. Okay, I don't know how to put it. I'll short moves, guys, but guys, just to be nothing but come to the market and try to short everything, it's gonna wreck your career, guys. You know, You got to find that niche that works for you. All stocks are meant to have some movement to the upside. Stocks are made to go up. Doesn't mean they always go up, but definitely don't come to the markets with nothing but a shorting aspect or view of life. Every stock will go through a period of accumulation. Okay, topping out, distribution, bottoming out, new cycle begins, rinse, repeat. Okay, so we've come to study patterns. You come to study areas where accumulation is constant, or topping out, or distribution, or bottoming out, such and such on maybe daily stocks. So that's a good thing to observe as well. Always observe for those periods, and I love to watch those periods too take place, and then I'll play the breaks for the upside or the downside depending on where that distribution decides to take place. Big long candles on big volume are often the start of something bigger. Scan and track those stocks. Many will end up being even bigger winners. Good example is that FAY again. Okay, big candle on the daily. um, big volume is the first thing that's ever happened on this thing for a while. You go back to the daily chart. I mean, look at this candle. I mean, what does it compare to the rest of the market? This could be the start of something bigger. Okay, we'll see how the weeks continue on this one, but most likely it could be the start of something bigger. Always another aspect here, guys. Always trust your gut. If something doesn't feel right, you've got to sell it. Analyze from the sidelines, emotion free. There's nothing better than that. Okay, if you got a gut feeling about something, jump out of it, analyze it from the sidelines, and you have zero emotion within the trade. Chat rooms are the best learning tool, but be aware of what is noise and what is quality actionable tradable information. Okay, a lot of chat rooms do have a ton of noise. That's what we've tried to make different with our chat room is we put nothing but learning material, quality actionable trading information, not all this clutter of this and that and whatever else. Beware of trades that fill easily. The best trades barely give you a good price. The other point is it takes a brave soul to admit a trade is not working and sell it at a loss. The easy thing to do is carry the position and hope it turns. Okay. This is a bad situation right here. Okay. It takes a brave soul to admit it's not working and sell it at a loss. But the easy thing that most traders do or new traders do is to carry the position, and they're on a hope and prayer that it turns around, only to see that it blows up their account or continues to eat at them or whatever it may be. You're in emotional turmoil because you're playing on hope. Okay, I've never seen hope as a winning strategy in my lifetime as a trader, guys. Your hardest work should be done while the market is closed. Think about that. Your hardest work should be done while the market is closed, so that when the market opens, you'll be prepared once your setups become active, like your watch list. Okay, you've got your watch list of all your top plays and everything looks good in your favor. Then that right there is going to help you guys set up for a better, easier day. Okay, you've got them all charted out, you've got them road mapped out, you know exactly where support and resistance is on every one at every given time, and work it out that way. So your hardest work should be done while the market is closed, observing those setups. Surround yourself with positive people. Haters are hating for a reason. They are losing, pure and simple. Positive people are winning or on the right path to winning. We got our chat room full of very positive people. I love our chat room, guys. They're always in there to try to win it. Any type of hating or down degrading or anything like that gets booted immediately. We don't like a negative impact. Got to keep the positive vibes rolling, guys. Work hard and work smart. Both are equally important if you want to make a profession from your trades. The character of the person will be tested when things are going horribly wrong. Will you be the phoenix to rise from the ashes? Don't brag. Beat your chest when things are going well. Eventually, Mother Market will always humble us, right? Been there, done that. The harder you force trades, the more likely to lose. Allow the natural process to happen naturally. Now, lucky breaks normally come when you are trading well, unlike unlucky breaks come when you are trading poorly. Okay. We've been to that where we just got a lucky break because we were trading well, but unlucky breaks happen even more so when you're trading poorly. Okay. I've even seen people trade poorly and get a lucky break. Unfortunately, it's like, wow, okay. Never mind, that turned around for them. But that's not a common occurrence. Okay. Winning and losing streaks come in cycles. Be aware with cycle you are currently in. So be aggressive when you're winning and confidence is high. Tops are a long process, rarely a single day event. Okay, so if it's stock, if you feel as it topped out, it could be rarely being a single day event. It could take a week to really give signs that this is the top or this is the bottom. Failed breakouts and deterioration of stocks under the surface are the first warning signs. Fewer and fewer stocks left holding up the indexes, like SPY and so on. Bottoms are a process, rarely a single event. Many stocks start to bottom well ahead of the indexes. So, these stocks all make up indexes, which is like, I'll show you guys here on the FinViz heat map. Right here, guys, you can see exactly what happened on Friday. Each one of these stocks make up the SPY index, okay, which is SPY. We like to trade SPY. All these stocks represent SPY, okay? So some of these will all find their bottoming areas well ahead of time before the index itself starts dropping, which would be SPY. Always be aware of what is going on in the market of stocks, not just the stock market. Indexes will always react to what is happening to stocks under the surface. In a bull market, you can buy dips and trade breakouts when momentum is clearly up. In a bear market, you can short weak, low volume bounces and short breakdowns when momentum is clearly down. Okay. Never go out there and try shorting a bear market or breakouts or dip buys or anything of that nature, guys. You're in for a rude awakening every time. And like I said, I'll play bear just as much as I'll play bull if the market demands it. Don't be a bull and don't be a bear. You have to be a predator, constantly lurking and stalking the easy prey. Permabulls and perma bears are dangerous, lazy, and arrogant. Don't take their views too seriously if you care about your trading account. So you may go to like a StockTwits account or whatever it may be, and you're reading some of these guys having their little opinions, and they don't really have a lot of experience in the market. They're brand new. Maybe they started in Bitcoin. All of a sudden, they think they can come to the stock market and know exactly what they're talking about. Um, don't take people's opinions, seriously. Everybody's got a voice. Most of the time it can be lazy and arrogant. Don't take their views seriously, okay? Especially if someone starts talking bad about your stock. What is your own analysis telling you versus this idiot over here making claims of this and that? I was getting bashed when I was playing Neo back when it was 7, 10, $20 a share. They were bashing about how they had no money, they're going to go bankrupt, this and that, only to watch the stock double and even triple from that price that they were talking about. I mean, it was nuts. Like, these idiots don't know what they're doing. I'm watching price action here. It's not about being bullish or bearish, guys. It's not even being about right, okay? It's about being right. Please understand this. It's vital to long-term survival, okay? So just because you have opinion on a bullish or bearish, just make sure you guys are right, okay? What is price action telling you? Catching falling knives will sooner or later land you into a minefield. Big difference between buying a dip and catching a falling knife, okay? The stock is crashing hard. So be careful about buying those dips, okay? Professional traders know strength begets more strength. Weakness begets more weakness. Anticipate now what you think will be popular later. Most traders are never happy with their trades. Understand that no trade will ever be perfect. When a stock breaks out on big volume, the first dip will normally get bought up very quickly. Another key factor that you guys should make note of: if you have no solid plan, set up proper entry, stop loss, exit strategy, target, then why you are in that trade. Okay. Oftentimes, the best trades require you to buy the high and sell even higher. Okay. I love those breakouts. Those double top breakouts are a perfect example of that. When we go back to Tesla on that. Learn to be patient once in a winning position. Learn to be very impatient when you're in a losing or even questionable position. Lowering a stop loss is the first sign of trouble. You're breaking the rules. Emotions are starting to creep in. Careful when you see that. I've got a student too who had trouble with this, and he actually sets up an alarm clock every 30 minutes or an hour, and he makes that alarm clock during the day to where it reminds him to make sure he's, self-aware. Okay. It's literally like a self-aware alarm clock. It's like, are you doing everything right? Are you still following your rules? It's just a self-awareness thing. Every people's got a different way of how they need to treat that, but we can get so much in the zone of buying and selling trades all day long or losing bad. And we don't have something to remind us, like, are we self-aware of what we're actually doing? Never ever give into a position that is too big for the account size. All it takes is a bad trade to cripple you beyond repair. Okay. It's okay to say I'm wrong in what I need to do now. Okay. Always be aware which stocks are exhibiting strength in a weak tape, which is weak market strength, weak level two, and so on, times and sales. Always be aware of which stocks are exhibiting weakness in a strong tape. So you see stocks that are being weak, but the buying and the volume is just really strong, like something's going on here. But if you see a lot of strength in a weak tape, then there's something as well. Always be aware of these scenarios. Boredom trades cost add up and can hurt you. Be aware when you're simply bored and looking to trade something just to trade. We go through the day, especially around that noon volume comes along. It's like, oh man, I got to jump into a trade. I'm bored. I haven't seen a move in a while. Let me just take this trade. Maybe it'll make me something. No. Okay. Don't do boredom trades, guys. If you're bored and the market is slow and you see no trade setups and you're just trying to willingly trade out of boredom, walk away from your computer. Okay. Your portfolio will thank you on that one. So very important. Don't just jump into everything. You will never buy the exact bottom, okay? And you'll never sell the exact top, okay? Don't beat yourself up if you left money on the table. Emotions is what causes most traders to break their rules. It's not the news that is most important, it's the reaction to the news. Respect the price action, okay? So always respect that price action, okay, guys? Never just jump into something that the news said such and such, and I'm gonna play my own reaction off this news, okay? It's not the news that's most important; it's that reaction, the price action on that news, okay? Use your gut. If it doesn't feel right, remove it. Reassess from the sidelines and emotion free, okay? Have a list of setups ready for the following day. Okay, do your pre-analysis, pre-market, or the night before. Know the trigger prices ahead of time. Have a plan. Set up position size, entry target, exit, max loss, and so on. I actually put a watch list every single day in our chat room, so people can actually play along with this. But it's right here, guys. Okay. I'm literally posting this up there so everybody can kind of play along, but look at this, okay? Easy to follow. I'm looking for Apple to break a certain play, and I'm going to play these calls right here that are this much a contract. I'm going to look for this price target, and this price target. Same with all the others right here, okay? I'm looking for these setups. This really helps new traders be able to follow along, have a plan, and you guys can formulate a plan around this if you want to. It takes me an hour every morning to really come up with a plan on each one of these, but I try to make it useful or beneficial for those that follow our system. No plan equals no trade, guys. If you do not have a plan for your trade, then why are you trading? No trade should ever, ever, ever be taken without a plan. I can't stress that enough. 10 times out of 10, traders who carry big losses wish they had respected their original stop. So respect the original stop loss always, okay? Over trading is the poison for trading. Less is more, okay? Never chase gap ups. Allow that first 30 to 60 minutes to pass by and then see what is setting up best in the intraday. I could say the same for gap downs, okay? You see a stock that's gap down, don't chase the gap downs just as much as you don't chase the gap ups. I actually would stress more on the gap ups because gap ups generally do tend to sell off. Gap downs do tend to buy up, okay? You want to enter stocks that have the best bases on all time frames: weekly, daily, 60-minute, 30-minute, 10, 5-minute. The more time frames align, the higher the profitability of that trade. Focus on finding good bases. The longer a stock bases, the more meaningful that breakout is. Now, most important down here at the bottom, guys, keep a balanced life. It's not all about the screen. Spend time with your family, friends. They deserve more attention. Stay humble, stay grounded. Remember where you came from, where you want to go. What is here today can easily be gone tomorrow. Respect what you have, yet shoot to achieve more. Okay, guys? Hope you found this lesson very useful, guys. I know I covered a lot of key points on this, but this is a compilation of different tips from all different traders right here that kind of put a list together. I wanted to kind of reiterate it myself with some of my own opinions in here. But guys, if you found this useful, please give the video a like and subscribe for more. I'm going to be posting more and more as the weeks come on. I try to keep at least a weekly, if not a couple videos a week, so you guys can follow along. We are entering into a $100 challenge, guys. I posted that video earlier, which I'll link into the description on this video here. But guys, hope you all have a great, fantastic week. Merry Christmas to everybody. Happy New Year that is coming up. And I hope you guys have a great day. And I will see you guys in the next video.